Hello from Trend Signal for our review of the data and events the week beginning the 27th of April. We have a moderately busy calendar this week. We're already into Tuesday, in fact, as we flick through to the calendar. We've had the first reading of the first quarter GDP here in the UK, which has come in weaker than expected, which initially knocked sterling and pushed gilt ahead, but after the initial reaction, sterling has recovered markedly, bouncing just over a cent from the lows after the data. So it looks like there's some pretty hefty shorts that still need covering out in sterling. Although the all-important non-farm payroll, despite this week being the first, we have the first Friday of the month, which normally signals the release of the data. It's not going to happen until next week. That's the 8th of May. I mention it is because a number of people are a little bit confused by it, but we are not. This is not non-farm payroll week. We do have quite a lot of data out, but before we look at that, let's just see what's going on in the markets. Last week, equity markets really put in another performance. FTSE, a modest up move of 76 points. That's just about 1%. The US markets were very strong though, with the S&P up 36 points, the Dow up 254 points. So that's around 1.5–1.75%. But the Nasdaq was the star performer, a whopping 185 points. That's 4.25%. That is a record close in the Nasdaq. Eventually, I say eventually, the first time in 15 years, it's really lagged well behind the Standard & Poor's 500 and the Dow Jones. Last Friday, Amazon announcing a big loss, but the share price rallying 15% on guidance. But as an article in the FT suggested on Monday, technology madness seems to be coming back. Certainly, the earnings multiples in the US are getting worryingly high again. The S&P 500 now trading at a multiple of 27 times average earnings for the last 10 years. Highest since the peak of 44, which is the top of the tech bubble when the Nasdaq was last at its all-time high. The only time it has been higher than that was immediately before the 1929 stock market crash. I'm not suggesting anything like that is going to happen, but a lot of analysts do follow the earnings multiples, and they are quite rich at the moment. Over the weekend and running into last week, the Greek crisis has reared its head, or continues to rear its head. Greece is trying to raise cash to pay its pensioners' employees this week. The Euro area finance ministers last Friday said they won't disperse more aid until bailout terms are met. And certainly Varoufakis, the Greek finance minister, has been accused of being very antagonistic, his style being very antagonistic, I'd say, which seems to have failed in Riga. And there are signs that Alex Tsipras is intervening a little bit more. Not that he's frustrated with Varoufakis, but I think he sees a different approach might be needed. Where this all leads, not altogether sure. My suspicions are that a number of Eurozone members will be preparing and have prepared for a Greek default. Whether that leads to an exit from the Eurozone, time will tell. It would certainly increase the probability that that event could happen. So the economic picture remains the same pretty much. Greece is insolvent and can't get its bailout money. US interest rate debate continues with every bit of data moving odds of a June rate rise. Well, to and fro. Is it going to be? Is it not going to be? I think June rate rise has gained more traction last week, but nothing obviously is certain. I guess the non-farm payroll next week is a very important number in this context. Halfway through the US first quarter earnings seasons, with earnings expectations cut as possible rate rises and a strong US dollar seem to have taken its toll on sentiment, although Apple results were pretty astonishing yesterday, that being on Monday evening after the markets shut. A lot is being built into that price though, but it's extraordinary how much revenue is generated by Apple, largely put down to iPhone sales in China. Let's have a look at the data and events this week. We got GDP data out, not just in the UK, which you've already had, as I mentioned, US and Canada. Rate decisions, the Federal Reserve obviously being the key one this week. I say obviously, let's mention that. That's the Federal Open Market Committee. They have a two-day meeting ending on Wednesday. In fact, it might be a one-day meeting, in fact, but they will publish their views on what they're going to be doing. I don't expect anything to happen there. Yellen told reporters that a June move could not be ruled out, but the Fed, I don't think, is expected to raise rates this time. But obviously, it suggests that, or it means that we'll be focusing very closely on any and all data that comes out over the next 2 or 3 months as to a clue whether we get that rate rise in June. So other data, well, we've had GDP data in the UK is probably one of the most important ones for the UK. This afternoon, we've got the consumer confidence number, which is building again in the US. Those numbers have always been very positive. The American consumer buoyed even further as oil price had slipped over the last 6 to 9 months. The rebound in oil could start to be reflected, but it won't be reflected in these numbers, I wouldn't have thought. We have CPI data, so inflation data certainly out in Germany. That is a negative number, so negative CPI, that's deflation. That's not what the Eurozone needs. And then we have the first quarter reading of the US GDP coming in at 1% consensus, obviously lower than the 2.2 previously reported, which was revised down, as you can see, from 2.6. The statement, the Fed's decision on rates, that's at 7 o'clock on Wednesday evening. We then jump to Thursday. We have a Japanese monetary policy meeting. We are not expecting anything from Japan either. They will stay pat for now. We have further inflation data out in the Eurozone. Again, the number we're looking at is consists across the board. That's in total a completely flat number, so neither inflation nor deflation. Weekly unemployment claims, obviously. Friday is May Day, 1st of May, which traditionally is a holiday, and as you can see, a lot of the Eurozone is closed for Friday. That's the 1st of May. Also, China has a bank holiday that day. So don't expect too much necessarily on Friday, although the US markets are open, as indeed the UK markets are. Manufacturing data out in the UK. On the back of a weak GDP data, which is quite, backward looking, as it were, the government would be quite keen, or the Conservatives and Liberal Democrats would be quite keen to see a more positive number. The consensus is for a slightly better number. And then we have the ISM manufacturing data out of the US with a further improvement seeing from 51.5 to 52.1. That's it for the week. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.